Did you know that starting in 2024, Canada's capital gains taxes are changing, and these changes could hit your crypto portfolio hard? Whether you're holding Bitcoin, staking Ethereum, or trading those altcoins, this could mean paying way more to the CRA. So, what does this all mean for those Canadian crypto investors like you? Hi, I'm Charlene Tessier, your Canadian crypto tax expert. Have you been following this? What's the biggest challenge you're facing with these unclear rules? Let me know in the comments below. Before we dive in, please note the information in this video is for educational purposes only and does not constitute financial, tax, or legal advice. For full disclaimer, check out the description. So, changes to the 2024 capital gains tax. How are they going to impact you? What's the current status? First thing you need to know is that this legislation is still in limbo. So, what does this mean? As of December 1st, 2024, these proposed changes to Canada's capital gains inclusion rate from 50% to 66% still remain unlegislated. This means the federal government announced the change in the 2024 budget, intending to apply these gains realized on or after June 25th, 2024, but it hasn't been approved yet. These delays leave investors like you really uncertain about what to file in the coming tax year. So let's take a look at an example of Peter. He is a Bitcoin trader and he plans to file his taxes on time. He doesn't want to pay any penalties, but he decides to use the old 50% rate. However, if the legislation passes in June of 2025, they will retroactively bill him for that 66% that he didn't include. So he will owe back taxes, he will have penalties, and possibly interest and fines. I know it's not looking too good. But let's take a look at the options between whether you can file, if you file at 50% rate or the 66% rate. Let's take a look at what happens if the legislation passes late. So you can see in this little graph here that if we take that 50% rate and we retroactively, and the legislation passes retroactively, you will have to pay back those taxes and interest. But if the legislation doesn't pass, then nothing happens. There's no extra cost. If you decide to actually overpay, which you can choose to do, and pay the 66% rate now, and the legislation doesn't pass, what happens is you will actually be issued a refund. If the legislation does pass, then you're okay because you paid more and kind of covered yourself. So what do you think you should do? Should you risk it and pay that 50% and hope that everything stays the same? Or should you pay that 66% and ensure you cover yourself? And if it happens to not pass, then you have a refund. There's one more difference between an individual and a corporation. Now, the capital gains tax for an individual is going to have a $250,000 threshold. What that means is that if you hit that $250,000 threshold, anything below that will still be taxed at 50%. Anything above that $250,000 threshold will then be taxed at 66%. I know, getting more confusing and more frustrating of what to do. Now, what if you're a corporation? Well, corporation is just going to be charged 66% across the board. There will be no threshold, and therefore it's really clear and easy to file. So what should you do? How can you have any misfiling mistakes, penalties, and avoid any kind of extra taxes or penalties to your filings? What you'll want to make sure you do is that if you're going to prepare your own taxes, make a decision about if you're going to do it at the 50% rate or the 66% rate. One little warning here is that all tax software that's currently going to be coming out isn't going to include the new 66%. Why? Because the legislation hasn't passed, so it has to stay at that 50% rate. Therefore, if you do decide to file at the higher rate, you will have to manually calculate it yourself. I know, not super fun. What else you can do is talk to your tax professional, run the scenarios, figure out what's going to work best for you. And if you're an individual, remember, it's only after 250,000 of capital gains that you would actually have to pay above and to the new rates. So if you're below that, you can be pretty safe that you can stay at that 50% rate. Again, you don't know unless you run the numbers in your tax return. The other thing you can do is, of course, follow CRA, follow the news, keep abreast of what is happening and seeing if this legislation might change between January to April. We don't really know. That July was really just a fictitious date that I chose. So I have no idea when this is going to pass and if it is going to pass. The other thing you should, of course, do is follow me. I'm going to keep you abreast of what's going to be happening here on YouTube. You could also follow me on LinkedIn and Reddit, but I will be here keeping up to date. And if you want to be sure you receive this news and you don't want to miss anything, and it isn't going to be hit that bell, of course, that would be great if you did, so that you don't miss my next video, is down in that description below, you will see a link to my 10 most asked Canadian crypto tax questions. That will give you not only the 10 most answers, but every week I will be giving out the most up-to-date information on crypto tax, especially with the upcoming changes. So I'd like to know, what do you plan to do? Let me know in the comments. Are you going to file at that conservative 66% rate, or are you going to take the risk and just file at 50%? Let me know. Well, now that you know what's happening with the changes for the 2024 capital tax gains, it's time to take some action and review your crypto portfolio. Consult that tax professional and decide whether to file conservatively or to wait. But here's the thing, capital gains are really just one part of that bigger tax picture. What about income from staking or frequent trading? Are you paying more taxes than you need to? Well, in the next video, we're going to tackle trading versus staking, which is costing you more in taxes. Till next time, I'm Charlene Tessier, helping you go from tax chaos to crypto clarity.